Hi, guys, and welcome back to the Fourth Revolution Quarantine Edition. Today, I'll be talking about why the market is stalling out right around 3,100, and I'm going to check out Tesla and Nikola, do a little bit of comparing and contrasting of the electric vehicle market. So here is the S&P 500, and we had this drop off last week, and we came down to this Fibonacci level right around 29.35, hit it in the futures. This is a futures chart, the S&P 500, bounced off that, and now we are stalling out right around 3,100. And earlier this week we had some really optimistic news on retail. Retail spiked 17.7%, but it's still not back to pre-COVID levels. I mean, there was obviously a lot of pent-up demand. Consumers were willing to spend as these economies reopen and these storefronts reopen. But I don't think we're going to be hitting the same level of retail spending or general consumer spending until full employment can come back, and that could be years. So I am not super optimistic. The Fed came out as well. I mean, that's what this drop off was here, that they were going to keep interest rates low. But Jerome had a bleak outlook, like I said in my last video, and it said that we need to, and as stock markets alluded to this, that we as stock investors need to check our risk reward levels. And I think that we are a little bit stretched at the moment. So I think investors are trying to figure out what to do here at this 3,100 level. And I am not a buyer. I would be very hesitant to jump into anything right now. I'm waiting for a further pullback. And if we can break through this 29.35 level in the next week or so, I think we have a further downfall to go, and we can hit this. So this is the 61.8%, which is the golden ratio for anybody who knows Fibonacci retracement levels. And then this is the 50% retracement from our February highs to March lows. And this is the level where I'm going to be a buyer in the stock market. So look for this 2790, roughly 28 level, 2800 to start really putting more money back into the market. So let's take a look at Tesla. And Tesla has just driven unbelievable growth considering the circumstances. So I'm comparing it here with the big three, FCA, GM, and Ford, and they're not even comparable. Like, these stocks have plummeted, obviously because of production and demand issues that this medically induced pandemic trade has caused the entire economy. And Tesla hasn't even flinched. They're hitting all-time highs right now, just surpassed 1,000. And you think to yourself, how could a company like Tesla, that's only sold its 100th car, or sorry, 1,000,000th car, earlier in March, compete with these powerhouses that have been selling millions and millions of cars annually for decades? So right now, Tesla is only about 15% off of the market cap of the largest automotive maker in the world. Toyota is the largest auto maker in the world, and they are so far behind in car production. But looking at the company from a valuation standpoint, we always look in stocks. We look forward, and it's a forward earnings and forward growth. And the world is headed towards electric and more sustainable vehicles. The question now is Tesla going to be that leader? Are they going to be able to control that market? And I think that since they've opened up the Shanghai factory and have made plans to open up the Berlin factory alongside, Elon hitting his targets for deliveries in 2019 and continuing to hit targets in 2020, is giving investors the optimism they need to push the stock to this level. But right now, I think that we are a little bit frothy. If I was heavily invested in Tesla, I might take a little bit off the top, pull some profits, and wait for it to see a little bit of a pullback. But as a long-term buy, I really like it. So Nikola has just blown up since its quote-unquote merger IPO. So they merged with Vecto IQ, which was an autonomous vehicle company, and the stock tripled right after it was announced. So they changed the ticker on June 4th. The merger happened on June 2nd, and you can just see this prolific growth that we're seeing. And the company's being valued at the same level as Ford Automotive Company, which has been making automobiles for a century or longer. And so this company hasn't made a single car, and it's being valued at the same level. It's just baffling to me how much optimism people have in this EV market. So I'm not a buyer of this company at all. I just think it's interesting. This is going to be a competitor of Tesla. They have their electric truck, which is going to be a big competitor, considering that Tesla's electric truck was a little bit I want to say avant-garde, but you know, this is going to be their competition, and Tesla. That's the concern right now with the $1,000 share price and the excessive valuation of $185 billion is the competition. Like, you have every single one of these players, Ford, Fiat Chrysler, GM, Toyota. They all have either an electric car on the market or are in the process of developing one, and they're not going to sit there and let this Silicon Valley startup just completely control the market. So there is going to be competition. There's no question of that. It's a question of if Tesla can continue to stay above of this innovative curve. And honestly, I think they could, but right now, I think the risk reward of this stock is a little bit too high, and I would wait for a pullback a little bit closer to the 500, 600 level before I would be buying more. Not saying that that's going to happen, but I'm not comfortable buying at this current price level. So once again, I think we are still a little bit stretched as far as the stock market goes. I'm waiting for a pullback. I would love to see us break through that 29.35 level, which I discussed earlier, and hit the 2,800 level for the S&P 500. That's when I'm going to be a buyer again. So don't forget to like, subscribe, comment, and check out our latest promo at zacks.com/promo. We'll give you a free copy of Kevin Matrix's book, Finding Number One Stocks. Thanks for watching, guys.